Hello, good morning. Welcome to another video streaming of ES Futures Trading. We got yesterday. I want to talk about yesterday first. Well, we have yesterday. You know, yesterday opening inside previous day range, and the 4500 was right. It was not that far. I was looking at this number here twice in a row. I guess I was fooled by this market. Okay, I saw this as a sign of weakness. Market re-entering this range multiple times yesterday. I saw that as a sign of weakness. Um, and this rally high at the closing, this I did not believe here. I was value was higher here, but I placed a bet. I placed a bet to the downside here because when the market re-entered this range so many times here and then in this range, but when the market took this low out and did not have downside continuation, it just died here. That's why I get out. I got out here. And actually, this wasn't a good trade. This wasn't a good trade. But there was nothing here. And what I was focusing, you know, is how these days, you can see these 2 days, how these look like a short covering. Short covering here, short covering here. And why short covering? Because this day was extraordinary range. Very wide range to the downside coming from an inside bar. And some rebalancing, there's some rebalancing of this short day here. And tomorrow, remember, tomorrow we have FOMC. There's, FOMC minutes release, right? There's no change in the monthly. Monthly remains as an inside bar. This is why I'm watching in the weekly. In the weekly time frame, the market keeps coming inside this range, and it's being rejected. It doesn't have acceptance yet here. It remains to be seen if it will have acceptance, which increases the odds trading to the opposite side of the range. But if there is no volume coming to the downside, it can easily, not easily, it can very well come back to the highs, because there's a nuance that I am carrying from this market, which is this high that was made in the overnight session. I haven't forget about that. It is not of relevance right now at this moment. But it is something that I am watching. No, I remember. I'm not going to let it go. Now we talk about this. The daily, we have a downside trend now. We had two distributions before. We have this distribution on the lower side and this distribution on the upper side, and a gap, a big gap in here. We have a gap here. We have multiple gaps below and one gap up here. And there's this range here. This is the range that I'm looking also. The market is coming, has penetrated this, taking almost half of it out, and now it's being rejected about this 4,500. This 4,500 level is being traded. Hey, but there's a fight going on there. Now, something also very thin markets. I'm going to take a screenshot of this overnight session. Yesterday we have a pretty well balanced overnight inventory. Let's see if that's the case today. All right, you can settle here. We have accumulation here, accumulation down here. I would say balance. I would say right now it's kind of short. 300. That's a good volume here. That's good volume we have here. Overnight inventory. Overnight inventory is short. I would say short now because saddle is way up here, very high, and there's a lot of trading here. All of these loans here are long out. You know, they are long time. They're not here. You know, this is short. The current state of the overnight inventory is short. Now, something that I am listening more and more. There's something that happened. I don't know if today or yesterday. That is today more. Fitch is threatening, not threatening. It's considered downgrading banks, U.S. banks. This could be something that can affect the markets. And the other thing is China on the news more and more. I was reading some article yesterday about this another big company that is today rates were cut yesterday. Today, right? And there's this big lender that it's expected to have big losses, and those kind of news are more and more circulating the news outlets. Now, regarding the overnight, yesterday, when the market closed this distribution here, I thought there was potential to at least coming down here, but it just didn't. There wasn't there. And I was aiming the market maybe coming somewhere inside this, making an attempt to close this distribution. When the market did not close this distribution, there's an indication that there's no serious selling there, at least in the short time frame. And value was higher, So value being higher, it's an indication of what direction the trade is. It should be, in this case, to the upside. But something that changed my view of yesterday is that before the close, POC was here. POC moved lower. Even value moved higher, but POC moved lower. There was some selling here in this area. So in this market here, in this market there was some subtle selling here, very well conducted selling, and all the shorts here were removed with this spike to the upside. Now this is a spike. No, make no mistake. This is a spike to the upside. The spike is a late, very late movement. This happened in the last 5 minutes before the closing. And higher prices are being rejected now. Market is going to open somewhere down here. Higher prices are being rejected. There's no acceptance of higher prices here. Um, but the current situation of the overnight inventories is really too short here. Really too short. What I'm looking into the opening is where the market opens relative to these distributions here. It may open if the market opens inside this distribution here, the distributions from yesterday will be closed, right? And that's a negative sign. Still, market is going to open inside. If that happens, inside previous day range, open inside previous day range, advertise chop, advertise rotation. Trending days actually are not that old. Doesn't happen that often. I was wondering yesterday, are we going to have some trend? Because it has been a while since we have a trending day. A trending day is a day that has a direction from the opening and never changed throughout the session. We didn't have one of those in a while, and not even here. And what I am looking is this opening here, you know? And the formations here. The formations, this looks like a short covering, but didn't have excess on the upper side. There were multiple weak references here. All those references have been clear from this day and from this day as well. The late spike repair, the last one here. There is another one down here. I'm going to open this day so you can see, and this one as well. All right. Notice what happened here. We have no excess here. No excess here. Back to back, no excess here. Now this is late rally high here. And once this is corrected, but it doesn't take that much. Right? When the market do this, notice how many highs, how many times the market try to go higher here. 1, 2, 3, 4, 5, 6, 7 times here. Even this one, this is the last one, I would say maybe 8 times. So there's a lot of stops here in this area. In this area. Here. This, the overnight doesn't repair anything because the volume is just too low. But what happened here in the upper side, here, 1, 2, 3, 4, 5, 6, 7, now this late spike could take some of these stops out. And the same thing is happening in the lower side. Notice how many lows do we have here? 1, 2, 3, 4, 5, 6 lows here. Even this one, 7. The same phenomena that we can see here. There's a bunch of stops here. There's a bunch of stops here in the lower side. In the upper side of this day, on this area, and the lower side of this area as well. And the retail sales number did not have. I guess the reaction was kind of muted here. The market tried to sell. There was tremendous amount of push here. Market was bought from this low. But notice where this level is being sold from. The 50 to the tick. This is not a good sign. I mean, the market is very short. We were talking about how short this overnight inventory is, and the selling coming from this high to the tick is not a good sign for the sales. Good also, this high is going to be repaired. and repairing this high puts the market somewhere in here, you know. And there is nothing here. This is nothing. All of these shorts now this is history now. I'm going to close this one as well. Now there is a we have change. We have change in the market. When the market took this high out, there's something changed. Oh, look at this! How this bond market has recovered. Okay. But that's not the way I want to talk. You know, we can see some selling here. The trend to the downside couldn't be established here. Notice how this market is, we are trending to the downside, okay? But zooming in, and we have 1, 2, 3, 4 days going to the downside. Now this day ends that trend, and this day try to resume the trend. This is a failure. And now we have a market to the upside. In the very short time frame. No, this is why it's very important to keep an eye on all time frames. So we can have perspective, we can have an idea what is going on. The weekly is going to the downside. All time frames are different. Right? People don't believe this, that not necessarily, but quite often actually, the time frames are different, are not in sync. When all time frames are in sync, the movement can be more, the market can have more strength. Notice how the bigger time frame, the monthly, is in balance. The medium, which is the weekly, is trending to the downside, and there is a total craziness in the daily. You know, upside, downside, no, the trend. You know, in the bigger trend, you can see the bigger trend going to the downside here. You know, this is the bigger time frame than this. But there's something changed here. What I can avoid, you know, traders are used to buy the 50. They bought here, bought here, bought here. Every time the 50 is being hit, it is bought. They are trying to do the same again. Now they are having some problems here. Notice how in this day and this day and this day here it was bought, and this day that pretty much to the tick. That's not happening now. So some selling. This level is quite relevant here, the 4,500. Into the opening, I will see what happened. As I said, my focus is this distribution here, the ability of the market to close in this distribution. If the market closes this distribution, well, let's see what I mean with closing the distribution here is opening somewhere. It could be here or up here or up here. And if the market makes an attempt to close the distribution fails, that could be there could be something to the upside there. But still, you know, context. Remember, context. Put everything in context. This is a day that's going to open inside. It may open inside previous day range. Opening inside previous day range. Advertise chop. Chop is very costly, both mental and financial. We can recover from financial losses, but once we lose our mental capital, it's really hard to recover from that. Value yesterday was higher, opening in this area here, puts the market below yesterday's value area. The 4,500 is against there. I expect some selling coming from the 4,500. Oh, if if the market opens below this area, below this accumulation of value here, all of the longs here, you know, all of the longs from here will be underwater. And as long as that the market remains here, you know, they may still remain in the market. If the market comes and closes this distribution, puts this low automatically inside, and then this low as well. Now, personally, I think the market is too short now. At this moment in time, it's just too short, very short. Good amount of good amount of volume in the overnight. The news are not positive. Retail sales have come out better than estimated, and that could that can give some room for the Fed as well to keep doing what they are doing, or to keep the rates higher for longer, for longer. Now, we have. I'm not going to call this. This is a spike to the downside here, little spike to the downside. Market opening up here is rejecting these lower prices. So mixed reading, the mixed readings keeps coming. From yesterday, rejection the higher prices here, and from the spike, rejection the lower prices here. So be careful. Today, I'm going to be posting in Twitter.
I almost feel like I wish I had a sure will.
And oh, as I say, you know, this is some rebalancing of the short inventory going on already. Market was too short, and this is my anything you need, you may want to ask. Just I am here. I found out this better than the stream. It doesn't distract me that much. Okay. All right. 10 minutes before the opening, I wish you guys. The market is really close to the center. It's coming back inside this. Right now, everything changed. It's changing all the time. I need to adapt. Right now, this is the okay. This is value area low from yesterday. Oh, come on. Let's see the market can get inside this value area. The market is going to keep. All sides is going to open in this area, in this upper distribution, which leaves this distribution still as a potential play. The 50 is right there. This high has been corrected. Very mechanical high. This high has been corrected. And now there's a considerable amount of shorts here. Good, not that good, but somewhat better volume in the overnight. All right. All right, guys. I wish you a good trading day. Stay safe. Good luck.